Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder at Lightfolio. Andy, the housing market is booming. We've got 30-year mortgage rates up above 7% at this point, maybe a little bit lower with the slide in yields over the last couple days. But how are these companies doing according to your data? Because it seems like demand remains, right? Even though we've got that high interest rate environment, that demand's not going to wane anytime soon because people still need to move. There's just not a lot of existing home sales, but new home sales are rocking and rolling.
Yeah, it's really actually very difficult to figure out. I'm coming on this segment really hoping you guys can help me figure it out just as much as anything else, because we look at mortgage rates, like you said, near 7%, a far cry from where they were a couple of years ago, where you could almost get a 15-year for 2%. Median price of existing homes is right around 400,000. There doesn't seem to be a lot of supply on the market, which I think is definitely keeping home prices somewhat elevated. Buyers just don't have that much to choose from. If you don't have to move, you're really not in a hurry to sell your house and move. There's not that kind of, bouncing around that people have because you're locked in at a 3 or 4% mortgage rate. You're not really excited about getting into the 6 or 7% on a shift. But, when we look at Zillow, Redfin, Opendoor, all of the Lightfolio data really points to the fact that there's a real significant slowdown, especially on these sites. Website activity for all three is down, except for Redfin's got visitors up. But in terms of the total activity that's going on these sites, significantly lower than it was a year ago. And the same for social media mentions, especially Opendoor, really kind of falling off the table. And so when you look and see that the stock is up, in Opendoor's case, 317% over the last, 6 or 7 months, Redfin's up nearly 300%, and Zillow's the laggard at only up 78%. You kind of wonder, what's going on, what the market is looking at in terms of, forward expectations, because right now, we just see no real impetus for these companies to turn to profitability anytime soon.
Andy, there's a couple things. Zillow Group, this online type of real estate where you can see listings online, that's got to be the future of real estate, right? I mean, I think everyone agrees with that. But Zillow kind of made some unforced errors here when they tried to get into the real estate business and buying homes, which cost them billions, and they had to exit that. Do you guys know if they're fully out of that, their exposure to that is done? Because, this is one of those charts where, you're right, it looks good for this year, like it's making a recovery. But if you put on a 3-year weekly chart, this stock was $212. And so the 3-year weekly looks a lot different. But our theory that Tom and I talk about a lot on this show, Andy, and I want to hear your thoughts, is real estate buyers don't go away. They don't shut down their business. When rates are spiking, they form a queue, right? And they're waiting on the sidelines. And when they stabilize or go lower like they're doing today, you can see a rush of buyers back into the market. They get uncomfortable and then they get less uncomfortable. Andy, your thoughts?
Yeah, it's a lot like we talked about yesterday, I think, with airline prices. Those skyrocketed, and initially people completely pulled back. They couldn't handle it, and there was a lot of squeamishness around that. But now people have gotten used to it and really aren't complaining about airline prices anymore. I think that it's probably the same for mortgage rates. I think you're right. I think that it's more about where they have been recently compared to today than where they were 3 or 4 years ago. And I don't think we're returning to the age of the 2 or 3% 30-year mortgage anytime soon. And so people are going to have to get used to these new levels. And the other thing I'll say that I think Zillow has done well, I do think that they've gotten out of most of that, kind of misstep inventory problem that you talked about. But they've also launched a rentals business, which I think is doing very, very well. Grew revenue 21% in Q1. And so I think what these companies are able to do and what the market's probably betting on in a big way is that as long as you've got the eyeballs of potential buyers, potential renters on your screen, and you've got those contacts, and you've got that mailing list and that alerts list, eventually, like you said, all of those people become a buyer or a renter at some point, probably in the next 5 to 10 years. And so as long as they're building out that technology, capability, and distribution, these companies are the future of real estate.
Andy, when you look at, they did get rid of their direct buying portion. That cost them $800 million last year to kind of exit that business that they kind of messed up quite a bit. But now they've got an asset-light model, Andy, where they don't own anything. They've got the site. They take in about $4,100 in total when a house sells between all the fees and stuff like that. They're trying to expand that. So they've got an asset-light model now at this point. But if yields do start to come down like we've seen over the last couple days, and, houses aren't selling, just as you mentioned, but at the same time, people go on those sites on a day-to-day basis. I've bought 2 houses in the last 2.5 years. I know you check those things on a daily or hourly basis. Ad revenue comes in a little bit. I mean, do you see that, affecting the bottom line in a positive way? And if interest rates come down, you're going to see a pickup of traffic even more as people get comfortable with higher rates.
Yeah, I think that is the whole play. I think we may just be witnessing, these stocks up so much because they were down so much. It may have just been an overcorrection to the downside, and maybe we're finding a little bit of a median here where they belong. But I completely agree with you. Even when we're not in the market, if my wife's on the laptop, she's probably on Zillow or Redfin looking at houses. I don't know why, but it's a pastime for a lot of people, and those ad dollars can continue to flow through to the platform owners, and it doesn't really have to be about the real estate market at all.
Now, would you guys be positive? I know they don't have earnings for a couple weeks here. What kind of ratings do you have, like on Zillow or the group as a whole?
Group as a whole, I think we're just due for a pullback. Yeah. I think that these astronomical returns of the last couple of quarters may be a little ahead of themselves, just as we got a little ahead of ourselves to the downside last year. All
right, great stuff, great data as usual. Andy, appreciate it. Have a good day.
Thank you, you too.
All right, that's Andy Swan breaking down the data for us here from Likefolio. Kevin, when you look at this stock, he mentioned it. I mean, Zillow Group's only up a specific amount, but you look at Opendoor and you look at Redfin, those things are exploding to the upside. Zillow just got upgraded just yesterday. Piper Sandler.
Yep.
Yeah, they put a price
from a neutral to overweight, price target 42 to 62.
Yeah, I mean, that's pretty positive for this. If they have that asset-light model, how do you want to look at this from an example trade perspective? Because, you look at a one-year chart and it looks pretty good, but then this stock was $212 a few years ago.
Exactly. The 3-year chart gives you a whole different story, and it shows you if they get it right and real estate comes back, the stock can do significantly better. So